Chief Investment Strategist at SJS Markets, joining us from Hong Kong. It's great to see you again, Darius. So to help us up for trade here, we've got Alcoa's numbers disappointing, triggering some sell-off in some of the resources. We also have signs of what another wave of tightening on the mainland. That's why we see a lot of weakness in banks. We also have a lot of worries about inflation, which you also highlight in your notes. So what should investors do at this point?
I believe that any profit-taking in equities or commodities at this point provides a good entry point for medium-term investors because despite tightening fears, central banks globally, especially in G3, will not do much. Only some emerging markets will raise rates this year, but not substantially. And at the same time, the global growth will continue accelerating through the second quarter of this year. So I believe that even at this point, with a time horizon of, say, 3-4 months, it's still a good entry point for both equities and commodities.
Darius, can you give us an idea of the extent to which you expect moves to the upside in some of the emerging and some of the developed equity markets?
I believe that developed equity markets are going to rise by about 10% from current levels. And the time horizon for that would be by the middle of the second quarter. So S&P 500, for instance, our target is 1,250. Emerging markets are going to do even better because growth outlook here is much stronger. And I believe that we are going to see gains of between 15 and 20%. But there is a caveat. It's only a short-term rally that I'm anticipating. Beyond the second quarter of this year, markets will focus on the risk of the double dip. Sentiment will turn around, and in the second half of this year, I expect a reversal of any gains that we are going to see in the first quarter. And in fact, most equity indices are likely to end the year below 2009 levels.
Darius, but if you actually take a look at some of the data points coming out of China, export and import numbers, and China, of course, overtaking Germany as the top export destination in the world, do you think Asia could actually suffer the impact, any waves of a double-dip recession, even if that happens?
Well, if there is a double-dip recession, then I'm talking here about the developed world. Emerging markets, as was the case in the crisis that has just ended, will, at least for the most part, continue to grow. But they are still heavily exposed to what's happening with demand coming from the US, Europe, and Japan. We just witnessed that there was a sharp slowdown in China, India, and actually negative growth last year in some smaller Asian economies, precisely because they are still heavily reliant on exports to the developed world. So if there is another slump in global economic growth, which I anticipate towards the end of this year and in early 2011, then emerging markets are unable to escape unscathed simply because they rely on external demand still quite substantially.
We'll leave it there for now. Thank you so much for your time and thoughts. Dariusz Kowalczyk,
Chief Investment Strategist
at SJS Markets. They're back to you.